Hey everyone, we're super excited to be with you here today. We're going to be talking about our first full cycle real estate syndication deal, meaning that we purchased the deal, went full cycle, and sold it for our investors. So we're going to be talking about Clearwater Manor Apartments. It's a 24 unit that we purchased up in Oregon on April 30th, 2021. And we just sold this January 5th, 2024. There are a couple of pictures up here. You can see that was when we purchased the property, the top picture. So a complete transformation. I can't wait to show you guys the before and after pictures on this property. I can still remember when we went to go buy it and we showed up there with our inspectors and our general contractors, and they were shaking their head in disbelief saying what a horrible building this was, how much work it was going to be, and that did not scare us. So we were ready to put in the work. We saw the huge opportunity available here, and we did a complete transformation on the building. So talk about a full apartment flip. This is it. So really kind of some background on us at Willow Investment Group. So Lupe and I started doing this in 2020. After our second daughter was born, we were looking at our very demanding jobs and wanting more flexibility and time freedom with our family. And so started literally Googling different ways to build wealth and stumbled upon real estate investing for obvious reasons. One of the best ways out there to grow wealth. And we went all in. So we founded Willow Investment Group. That is our real estate syndication company. We have 6 apartment complexes up in Oregon. We also have a beautiful self-storage space down in Arizona market. And we raise capital for these deals. So we partner primarily with healthcare professionals. My background's a nurse. I've been a nurse over 10 years. And so started really attracting a lot of interest from healthcare professionals who work high demanding, high income jobs, and they have some money that they want to put to work. So real estate investment's a great opportunity to passively invest your money and grow it at a way better rate than the stock market. So we've raised $5.5 million for these deals. In the last 4 years, we've coached dozens of healthcare professionals into their first real estate investment. We couldn't do it without our team. So we have a really great real estate team consisting of a real estate savvy CPA, a premier law group who helps us with all of our paperwork, and also cost segregation, because we were always looking for ways to optimize these investments when it comes tax time. So with that, the agenda for today, we're going to talk about the investment timeline. So Lupe is going to go over really the story of the building and how we transformed it. We're going to look at the initial versus the final projections and where we came in there. We're going to review the investment return metrics and then have a summary for you guys. So with that, I'm going to kick it over to Lupe, and check out these before and after pictures. They're great.
Thanks, Joanna. Again, my name is Lupe Arroyo. I handle acquisitions and asset management for Willow Investment Group. I talk to property management every day. I'll handle all the CapEx projects, anything related to the property, to the numbers. I'm on top of it. So we're gonna go back to 2021 when we first started with this property. We went into contract in spring, and with a purchase price of $1.9 million. Through negotiations and due diligence, we ended up closing at the end of April. We had a handful of CapEx projects, exterior and interior. The big first one was the roofs. We were not expecting the roofs to be this old when we went to the inspection. So this allowed us to negotiate a $50,000 credit with the owner to put those funds towards the roof. You can see the big transformation from the picture on the top to the bottom, how it looked with the old roofs and the new roofs. Replacing the roofs, we also had a few full unit renovations. We installed sliding glass doors on all the downstairs units. You'll see pictures of that in the next slide. And we also had a water conservation program where we installed new toilets on all the units.
Yeah, so when we first went to do due diligence on this property, every single unit that we went into, the water faucets were running, right? Either the shower heads or the faucets. And this is something coming into it that we knew, because when we were doing the underwriting, we saw the huge water bills. And when we came in and could see the huge problem, really through the state of Oregon and their Energy Trust program, they really help owners of these multifamily buildings. And they sent us all new aerators for every single faucet, new water conservation shower heads. And then we went ahead and put in new toilets and drastically dropped this water bill. So that was a huge value add opportunity that we saw coming into this project.
After we completed the roof replacement project, we continued the exterior projects, which included window replacements and painting the exterior because we did not like this yellow mustard colored when we first walked into this property. The pictures, you can see the pictures of the window replacements. There were old aluminum windows, non-energy efficient. The sliding glass doors, these are the new ones that we installed in 2021, but you can only imagine how they look like when you're looking at these windows. Over on this picture, you can see the final transformation of the exterior painting and the windows. You can tell this is the same picture side by side, and they look completely different. In addition to the exterior projects we had a number of turnover projects. 2022 was when COVID regulations were uplifted. There was a lot of moving things going on, a lot of evictions, people just moving in general, which allowed us to really increase the value of this property. And so we really had our hands full in 2022. But here are a few pictures of the interior renovations.
So as you can see, this was a huge lift for this building. And although it was a little disruptive, you could say, to tenants to replace every single window and sliding glass door, the feedback that we actually received from our tenants was really great. They were constantly telling our workers how excited they were that an owner was coming into this building and actually doing something to take care of the building. They feel like, I mean, there was tenants who've lived in this building for decades, and they said, just a lot of the previous owners really didn't care that they weren't taking care of the building. And so a lot of them were giving us the feedback and comments that they were excited to see the new owners actually care. So that was some amazing feedback that we received as we were doing renovations for this building. As you can see, it was a complete transformation. These are some more pictures of when we moved in. So really where we invest, I mean, it's a tertiary market. What's the population in the city is
3,500.
Yeah, so a small town, but home ownership rate here is very low, around 30%. So meaning that the majority of the people, around 70% of the people that are living in this small town, they need to rent. They don't have the income or the finances really to be able to afford to buy their own home. And so it allows us as multifamily owners to really experience low vacancy. So the whole time on this building, we're experiencing less than 5% vacancy because the demand for rental housing is so high. So unfortunately, sometimes in these buildings, when you're taking them over, you're left with a lower tenant class, as you can see from the pictures above. But that's a part of the transition and a part of the value add opportunity is that we're going in and transitioning those tenants out. And by doing the repairs and renovations, now we're attracting a higher tenant base who's willing to pay more on rent.
And of course, the top pictures are your before pictures, and the bottom are your renovated units after we've turned them over. Now, once we hit 2023, everything was more stabilized. All the units, majority of the units were turned over, and cash flow was coming in. So we found this was the great opportunity to reach out to our broker to reevaluate the property to see where we were at in our investment timeline. Because at this point, we had already reached our year five rent projections, and we were looking forward to a nice exit for our investors.
Yeah, so as you can see in this last picture here, I mean, the building really experienced a complete transformation. It looked a lot different than we first came in. So to be able to see that is really something special as an operator on these deals.
Finally, to close it out this year, we made sure we're always thinking about taxes and how to defer them. So we made it a point to close out this deal in 2024 and not in 2023. So we closed it on the first Friday of January. We wanted to get our investors, the initial plan was to get our return funds and the proceeds to investors all at the same time. But due to the reconciling of the billing with our property management, that would take 30 to 60 days. We decided that let's send the investors their funds back first, which happened on January 30th, and then finally when we were able to close all the books on February 29th, that's when we distributed all the net proceeds from the sale.
All right, so now we're going to look at what the initial versus the final projections looked like. So I'm going to show you here this rent roll because I think it shows an accurate description of really kind of what we walked into in this building and what our goals were. So a big opportunity for this building was the ability to push rents and to force appreciation into this deal. And when you can do that on a multiple at a building with 24 units, there's huge opportunity here. So these are the rents where we started with the 24 units. As you can see, the different spread in unit size and where we were starting out. And this is the numbers from our projection. So this is from our first slide that we sent out for this deal as we were raising capital for it. These were our original projections. So this is what we were aiming for with this building. So the green is highlighting where the rents currently were when we went to sell. So at around year 2 and 3, because of inflation and everything that was happening on the economy, the rental increase in prices, we were actually receiving a lot of year 5 rents targeted at year 2 and 3. And so that really alerted us the opportunity to sell this for investors because we really were achieving our end results at that point. So really kind of where we started and where we ended on each of the different segment sizes. Overall, looking at the total monthly income on the building, so where we started at, it was bringing in around $16,000 every month and ended at bringing in $24,000 a month. So that's a 45% rental increase in just a couple of years, which really goes to show how powerful these value add deals are when you are in control of forcing that appreciation through rent increases and repairs and renovations. That's when you can really add value to these buildings. So looking at the return metrics and what we projected versus what we realized. So we always do our underwriting very, very conservatively. When we're looking at our underwriting for this building, we're looking at a very thorough market analysis and what we're seeing in that specific market, both with employment trends, income, population, what all of that looks like so we can get an idea. We also talk to property managers in the area and we thoroughly review the books. So we look at the last 3 years of what has been happening with the building. We look at all the income that it's been bringing in, what the expenses were. So that gives us a really good idea of how to underwrite these. And so we were projecting around a 19% average annualized return. And this is the number you want to compare to the stock market, which historically does around 6 to 7%, right? So we were aiming for around 19%. We ended up coming in at 25% on this building. So huge, huge opportunity for investors, a great way to be growing money. Internal rate of return. So we were projecting around 15%, ended up achieving 18% for our investors. So this return metric takes into consideration the time value of money. So because we were able to exit the deal sooner, that number did go up. The equity multiple. So our goal is usually always to double our investors' money. So we're looking at around 5 to 6 years, which is what we were anticipating for this building. We were looking to double our investors' money. We ended up getting 1.57 equity multiple in less than 3 years. So in 32 months, we were able to achieve that. So that's why we ended up exiting early. So really a summary of this deal and how it played out. All of it has been done through our investor portal. So all of the reports are available there for our investors, investment documents, and access to new deals. So if you're interested in any upcoming investment opportunities or you want to take a look at our investment portal and portfolio, go ahead and create an account on our portal. Taxes for this building. So K1s we delivered. We're going to be delivering mid-March for 2024, and we will actually be delivering K1s in 2025 because we ended up closing in 2024. So that's kind of the aftermath in this building for investors. And regarding Willow Investment Group, we would absolutely love your feedback. If you are an investor in this deal, we would love to hear from you. If you are interested in upcoming investment opportunities, would love to get you in one of these. First step would really be hopping on a call with me. I just love to get to know our investors and your investing goals. and really kind of what you're working with before you jump into one of these deals. So if you're interested, let's hop on a call. And the best way to stay up to date for future deals is to get into our investor portal. So that's really our biggest communication tool because we do 506B offerings, meaning they are available for unaccredited investors. You will not see us posting anywhere on social media when we do have a new deal. So it's important to establish a connection and a relationship to get a part of these investment opportunities. And looking ahead for 2024 goals. So we are constantly looking at multifamily. We have experienced such great results in the last 4 years investing in this asset class. It has proven to be extremely resilient through the COVID-19 pandemic. It was multifamily is the first asset class to bounce back after the 2008 housing crisis. So we are all in on multifamily deals. We will be continuing to do deal flow. So if you want to jump into one of our future investments, please reach out. We would love to connect. On the screen right now, I have the QR code that goes directly to our website. On there, we have a lot more information about investing in real estate syndications, what that logistically looks like, how you can get started, and more information about upcoming opportunities. Over here is a picture of Felipe and I at a real estate conference last month over in Houston, Texas. We're very involved in the real estate community, constantly staying up to date with education through books, podcasts, and different networking events like this. It really is about your network in this space. So if you guys are around at real estate conferences, please say hi.
And we're underwriting deals every day, looking for the next one. So stay tuned.
Thanks, everyone.